Hello everyone, this is the pre-market report video for today 28th November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. First, on Friday in US, all the macros which were released was very much mixed. Just immediately after the US market opening, S&P Global released the US PMI data. Here, the manufacturing sector contracted more in compared to both previous and as well as expected, but service sector expanded more in compared to both expected and previous month value. So, manufacturing sector contracted, service sector expanding. Just for info, in US, service sector accounts for 80% of GDP, manufacturing accounts for only 19% and agriculture 1%. In US perspective, for that matter, in most countries, including India, service sector always plays more important than manufacturing. So, overall, US business activity in November was steady. This is the first positive. Second, National Retail Federation, US Retail Trade Association, released the report that people in US on an average expect to spend $875 on the retail stores this coming December month, which will be 5% higher. However, on the huge negative side, very important, for the first time in the last almost 3.5 years, private sector employment declined. Again, this might possibly due to the high interest rate, but noteworthy thing is it's declined. So, positive things cancels negative ones. Thus, on Friday, US market closed flat to positive 0.1 to 0.3%. Now, more or less, market believed and price already factored no more interest rate increase in the short term. Then the biggest question is when they will start the rate cut cycle. To speculate on that, this week there are two very important events. First, on Thursday, US Commerce Department is going to release the second estimate of third quarter GDP. Then, followed by on Friday, very important, widely expected PC inflation data release, which in many cases, Fed chairman itself said in his press conference, this is the important parameter which they use to take the interest rate decision. In addition, new and pending home sales and ISM PMI data are also expected to release this week. So, market at present playing a waiting game. The mild percentage US market increase on last Friday, more or less the same was decreased last night. Dow Jones decreased by 0.16%, S&P 500 decreased 0.2% and Nasdaq down by 0.07%. In case of US VIX, it's same as last Thursday night, below 13. So, US market back to the same exact place at Friday Indian market close. Regarding Indian ADR, on Friday, in line with Indian market, both banks closed positive, whereas both IT stocks closed negative. However, last night all closed negative, especially IT stocks, it's further negative. Infosys, Wipro and ICICI Bank all closed 0.5% negative and HDFC Bank dropped over 1%. So for today, for now, both banks and IT ADR indicating a negative trade. But I like to tell one thing. In last some of the weeks, I did mention about arbitrage between Indian ADR and Indian stocks in our market. So short-term monthly basis, it's all true. However, during the weekend, I found out between HDFC Bank and HDFC ADR, there was at least still 6.8% price difference. After the merger, this was always the case. So, the US market was 6 to 8% positive or higher compared to Indian market, which shows how much of the short position was in HDFC Bank in Indian market, and for that they hedged it in Indian market. Eventually, in 1 month or in 6 months, both will converge. Till that time, we can't trust the HDFC Bank ADR negative close. Anyway, moving on, about GIFT Nifty, today early morning it closed at 19,852. Here only 3 more days to expire, so we can expect the premium to reduce 20 to 30 points. Based on that, at present it's indicating 20 to 30 points gap up opening. About institutional activities, to my surprise, on last Friday, FIA was mega net buyers. The net bought for 2,625 crore rupees and DIA also the net bought but only for 135 crore rupees. Regarding oil, there was an uneasiness about whether the OPEC plus countries will do further oil production cut or not in the upcoming meeting on coming Friday, which in turn made the oil to drop around 1%. At the time of this video, Brent crude is trading around $80 per barrel and WTI crude is trading at $75 per barrel. Regarding stock specific, I like to highlight only one thing. Yesterday, there was a report released about sensitive rift for India's oil purchase payment since Russia don't want Indian rupee and also they insisted to pay in Chinese yuan. In the same report, they highlighted in August month that over 12 ships carrying million tons of oil was diverted to other destinations which was originally intended to send to India. So this might potentially affect Reliance Industries. Let's see. As a summary, US market closed neutral and even Indian ADR, though last night it closed negative, it looks like no concerns, but I may be wrong as well. For now, GIFT Nifty indicating a gap up of 20 to 30 points. However, there are some weakness in both IT and oil stocks. Moving on, as per stock open interest, Apollo Tyres, Berger Paints, Shree Cement, Oberoi Realty, IOC, ONGC and Bosch got an increase in open interest along with a negative close indicates the short build-up. On the other hand, BHEL, GMR Infra, HAL, NTPC, BEL and NMDC got an increase in open interest with a positive price close indicating long build-up. About the things to look out, around 10:30 am, Japan's core inflation is due. Other than that, only for US market, in the night, some FOMC members' interviews are there and CB consumer confidence data for the November month are some of the items we need to keep an eye out today. Coming to technical, on last Friday, Nifty opened flat for the 7 straight sessions. It continued to consolidate within that 16th November candle range, 19,620 to 19,875. And specifically on Friday, it traded in the range of 30 to 40 points. I mean, on the top, it's 0.1% in the positive region and 0.15% in the negative region and finally closed almost near absolute flat. Hence, unless Nifty either decisively closes above 90,900 on the higher side or below 90,600 on the lower side, the range bound trade is likely to continue in the coming sessions as well. Thus, on the daily chart, it formed a small bearish candlestick pattern with upper and lower shadow. However, if we see this in weekly basis, it formed a bullish candlestick pattern with a higher lows for the 4th consecutive week. Thus, the short-term weekly momentum is very positive. And also in the last session, the daily momentum indicator had a positive crossover. So the overall trend is positive. A clear move above 90,900 might prompt a significant rally, potentially driving Nifty towards a new all-time high value. On the contrary, a decline below 19,700 could potentially trigger a further market correction with a strong short-term support at 19,400, which coincides with 20-week exponential moving average. In case of Bank Nifty, it opened 30 points gap up and continued to perform better than Nifty for the second consecutive session and closed 0.44% positive. Thus, on the daily chart, it formed a bullish candlestick pattern and also after being below for 5 consecutive sessions, finally, it climbed above the 20, 50, 100 and 200-day exponential moving average, which is really good, possibly a potential reversal. Again, on the weekly basis, Bank Nifty increased 0.4% and formed a bullish candlestick pattern with a long lower shadow, indicating strong buying support at lower levels. So now 44,000 is a pivotal point. A decisive move above this level could potentially trigger a substantial rally, and on the downside, visible support is present at around 43,450 200-day simple moving average. Then on the options front, the maximum call option open interest was at 19,800 followed by 19,900 and 20,000, with new maximum call option writing at similar strikes in a similar sequence. Thus, the options data indicated that 19,800 to 20,000, the whole 200 points itself a crucial resistance area. Whereas on the put side, the maximum put option open interest was also at 19,800 strike followed by 19,000 and 90,500 strike, with new put option writing at 19,800 strike and then followed by 19,000 and 90,600 strike, which shows the support at 19,600 to 19,500 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.